All right. Hello, everyone. Welcome, welcome. Come on in. We're going to wait just a moment for everyone to come in and we will get started. Glad to have you and excited to talk profit first today. So come on in. Feel free to use the chat. We do have Abby from my team who is handling the chat. We will have some space for questions at the end. So feel free to add your questions to chat as we go along. And then if we can answer it, we absolutely will. All right. In the interest of time, let's get started then. All right. Today we are talking profit first. Today's training is an introduction to profit first. So obviously, we could talk about profit first for hours. I wrote an entire book on it, which you can see behind me. And the audio version of the book is actually like 6.5 hours long. So today, in this 45 minutes to an hour, we're going over some of the high level items so that you can have a better understanding of profit first and you can have some tools to go implement it in your practice right away. So I'm Julie Harris. I'm the owner of Green Oak Accounting. I am also the host of the Therapy for Your Money podcast, which is launching for season 4 today. Right now is relaunching for season 4. We're very excited about that. And I'm also the author of Profit First for Therapists. And so I like to start our little Profit First journey with telling you a little bit about me. I was a very hesitant business owner. I hesitated for a long time before becoming a business owner, in part because of my money story. My mother was a serial entrepreneur, and I show this picture of a sewing store in part because that was my very first experience with business ownership. My mother owned a sewing store. Many of my very first childhood memories are in that store. And I just remember my mother working so hard. She was always working on something. And um, despite that, that was not enough for her to make enough money to support us. That store eventually failed. And there were other businesses after that that also eventually failed as well. And so when it was my turn to, grow up, and as an accountant, I technically knew what it took to have a profitable business, right? I know how a profit and loss works, but I was really hesitant, and because I had seen my mother try and fail so often. And so for me, that is when I actually found the original Profit First by Mike Michalowicz. So I used it first and foremost in my business before I started implementing it with my clients. But when I did start implementing with my clients, it was truly a transformational experience. So I had seen it work for me. I was able to build a business, an accounting firm that always was able to make a profit because I knew exactly what it was going to take. I had a fail proof system for that to happen. But then I saw clients go from really struggling financially to understanding where the money was going in their business, able to quickly identify issues and troubleshoot, but also able to turn that situation around. Profit First is not a quick fix. It does take time for things to change and for things to get better financially, but it is really effective. And so that is my how I came to Profit First. And then eventually I did team up with Mike Michalowicz to write Profit First for Therapists, in part because a lot of our clients, accounting clients, were coming to us saying, I read Profit First and I love it and I want to do it, but I don't quite get how to bridge the gap between the book and how to do it in my therapy practice. So I just thought we needed a roadmap that was going to lay out exactly what needed to happen at various stages of private practice for this to be successful. And in part, I also know that what you need at each stage of practice just changes. It is not the same. What a solo practice needs versus a 15 person, $1.5 million practice, those needs are just different. And the way that they spend their money is going to be different. So all of that is laid out in the book. So today we are talking profit first. And as I talk about it, I want to always come back to this lens that I have about money. So everything that I do, whether it's the book, in my accounting firm, when I talk to practice owners like you, everything is done through the lens that your practice deserves to be profitable. And so when I say that, I know it sometimes brings up some emotions, right? Like, well, I'm not in it for the money. I'm in it for to help people. And that is all well. I want you to help people. You are helping, you chose a helping profession. But I truly believe that your practice deserves to be profitable and that actually makes you a better therapist. It increases the impact that you have in the world. If you are not constantly worried about money, if you're able to do your best work, hire more clinicians if that's what your heart desires, if you're able to see the number of clients that you would like, take a vacation when you need that, be able to rest and take some time off. All of those things are going to ultimately make you better at being a business owner. It's also going to make it more sustainable so that you can keep doing this work longer without burning out. But if money is always tight, that's just a very stressful situation. And that often is what causes practice owners to leave the profession or to go back to working for someone else, is because it's just very, very stressful on the personal financial level. And so even though you are a giver, you do deserve to have a profitable practice. And so Profit First ultimately is a cash flow management system. We use it because your top line income or the gross income coming into the business, it ultimately does not matter if you are not making a profit, right? Your gross income, if you're making 100,000, $1 million a year, none of that matters if your profit is zero, because that means there is nothing left for you at the end of the day. And so Profit First is a way to make sure we build in profit from the very beginning. We do that by turning the accounting equation upside down. So the accounting equation on the left, I hope that you have seen it. If you are a business owner, this is what you'll ultimately see on your profit and loss. And again, if you're a business owner, I hope that you've looked at your profit and loss at some point. But the accounting equation is that income minus expenses equals your profit, right? Income minus expenses equals profit. When we turn that accounting equation upside down, it is income minus profit equals expenses. And so we're carving out profit from the very beginning. We're making sure that there is always money available for profit and the expenses come later. And that doesn't mean that you're not going to fulfill your obligations, that you're not going to pay your expenses. But when we carve out profit from the very beginning, what happens is that there is simply less left for expenses. And when that happens, you're usually going to naturally spend less, but you're also going to get more creative on how that money is spent. It gives you a little box to work within, right? We need expenses to fit within this. And so this is what it's going to take for the practice to be profitable. And when you have that kind of guideline, I find that therapists respond very well to that. If you know what the rules are, you're really, really good at playing by the rules. And so we build that into the practice. And so profit is no longer just a leftover, right? Something that you get if there is any money left over. Profit is something that is intentionally built into the business so that you know that you will be okay. And so let's start by going over some of the Profit First principles today. So one of the Profit First principles is that we use smaller plates, right? Use small plates. And so I am part of the Finish Your Food generation. And so back in the day, that was a good thing to clean your plates. And so if I was having dinner at my grandmother's house and she gave me a big plate of food, not only was I telling her I loved her by finishing the food, but I was also probably going to get praised for that as well, right? So I'm not saying that's not saying that it's good or bad. It just was. And so for me to this day, that means that whether I'm eating from a big plate or a little plate, I'm probably going to eat most of the food on the plate unless I spend a lot of mental energy thinking about what I'm doing, right? So I'm thinking about, am I still hungry? Should I have one more bite? Should I eat the broccoli or the rice, or what should I do, right? I'm spending a lot of mental energy controlling that. Otherwise, I'm just autopilot going to finish the food. The way we translate that to your bank account, though, is if all of your money is in one big plate or one bank account and all the money is just sitting there, your brain is naturally going to go to, these are the resources that we have available. Let's consume them. right? Let's just consume them. We have all this money available. Let's find something to do with it. And that's, sometimes how business owners get in trouble. And so within Profit First, the way that we are using a smaller plate is that we're going to use multiple bank accounts. So instead of having just one big bank account where all the cash is sitting, we are going to have somewhere between 5 and 6 bank accounts. And so the first bank account, we're going to go over them in a little more detail, but you'll see the flow of money here. All the deposits will go into that one bank account and then move to the other accounts on a regular basis. So let's go over each in a little bit more detail. First, we have the income account. That is the account where all the deposits are coming in to the business. In most cases, especially for an insurance practice, your existing checking account will become your income account. We do that because once insurance is paying you regularly in a specific bank account, we do not want to mess with that for one moment, right? We do not want to mess with it. So all income continues to come into that bank account, and we're going to move the expenses instead. Now, if you have a cash pay practice or private pay, sometimes you are able actually to very easily move where the deposits are going, and it only takes a business day or two. But for an insurance practice, excuse me, that can take a couple of weeks to move, and so we don't want to mess with that at all. So in this account, you'll have all deposits, no expenses at all. Next up, we have the profit account. As the name implies, with Profit First, right? This account has two big jobs. It is half savings and half reward. So this is the account where you're going to hold the funds that are what we're calling profit. It's going to reward you for being a shareholder of the business. So these are not going to be the funds that you're going to use for just paying your day-to-day living expenses. If you own stock in a company, right? Let's say you have a stock in a dividend-paying stock, like I believe AT&T is one of those. On a quarterly basis, you're going to get in the mail a little check or a big check, depending on how much stock you own, to thank you for being a shareholder of the business. You didn't go to the AT&T store and do any work for that. You just invested your funds and you got that check. And so when you are a business owner, you definitely most often are going to be working in the business, but you are also a shareholder of the business. You take on risk by all the work that you do and the investment that you make in the business. So these are the funds that reward you for all the risk that you take in the business. So in this account, on a quarterly basis, you're going to take half of the funds that are available. You will reward yourself with that half. You'll leave the other half in the business as an emergency savings account. So with these funds, we typically recommend that practice owners do something really fun, like go out to dinner with your family. Maybe it's a nicer dinner than what you would normally do. If it's a large amount, maybe you're going on a weekend getaway, on a trip. Maybe you're putting a patio into your home. Maybe it's the down payment. It's going towards the down payment for a new home, right? It can be a lot of different things depending on the size, but it should be a reward. It should be above and beyond your day-to-day living expenses. Next up, we have the owner's pay account. This is the account that really should cover all of your day-to-day living expenses. Whatever your household looks like, whether it's rent or mortgage or car payment, kids' activities, putting food on the table. In an ideal world, this account is going to cover all of those, right? You're going to be able to have either your ramen noodle amount of money, right, where you're just barely covering the basics, or your ideal, this is what it takes for us to live comfortably, dollar amount. But this is the compensation for the work that you do in the business, right? There's a good chance that you wear many, many hats, probably a clinician hat, maybe sometimes a biller hat, sometimes a receptionist hat, maybe even sometimes a janitor. But this is where you get paid for all the things that you do every day in the business. Our next account is a tax account. Now, I'm a US-based accountant. Many of you, I suspect, are US-based as well. In the US, most businesses are not going to pay taxes at the federal level. So most business entities, and this is an LLC, a sole proprietorship, a partnership, an S Corp, All those entities are pass-through entities or flow-through entities, right? That those two terms are used interchangeably, where the business does not pay tax at the federal level, but rather the profit flows through to the personal tax return where it is there then taxed. So technically, the business is not paying tax at the federal level. Sometimes it is paying tax at the state level, though, right? Depending on that situation. So in this account, we are earmarking funds for the business to pay tax on your behalf, right? It is paying that for you so that when you owe tax, it is not coming out of your personal cash flow. You're not left on the day your quarterly estimated tax payment is due, wondering like, where is this going to come from? Is there anything in savings, right? You've got money earmarked for that. And so this also makes sure that you're not going to accidentally spend those funds. Next up, we have the operating expenses account. This is the account where most of your day-to-day expenses for the business are going to come out of. So these are things like software, liability insurance, rent, subscriptions, professional services. All of those are going to come out of the operating expenses or OpEx account. So all of your expenses are moving from your existing checking to this account if your existing checking account is becoming your income account. All of that is shifting. So this is the account where you're most often going to have a little bit of wiggle room, where if you're looking at making an investment or buying something new for the office, usually you're going to come look at this account and see, is there money available here? And then last but not least, we have the payroll account. This account is optional because it only applies for group practices. So if you have a solo practice, you actually don't need the payroll account. Even if you have a solo S Corp, your payroll can be connected to that owner's pay account because it's just for you. But if you are paying admin, clinicians, leadership, I would love for you to have a separate payroll account. From that account are coming wages, payroll tax, and benefits for all team members, right? So no matter whether it's clinical or if you are on a salary, all of those funds are being withdrawn from this account. So this is one area where actually my recommendation is different than the original Profit First book. And the reason is this: in a private practice, if you have team members, if you're in a group practice, payroll is going to be the single largest expense in the business because the team members that you hire are highly, highly educated. They're pretty expensive. And so by having that single largest expense in its own account on its own, we are able to really quickly identify if there are problems, if something is going wrong, or if all of a sudden something is out of alignment. This allows us to have really a good amount of clarity over what is going on in that payroll account. And so you'll automatically know, do we have an issue in OpEx? Do we have an issue in payroll? Because they're in separate accounts, you will know. I want to go over to one of our next core principles, which is removing temptation. And so here I'd like to take a little detour, and I'm going to tell you the story about Google. And they have, I'm sure everyone has heard of Google as a company. You may know they have amazing perks for their employees, right? They're known for having bicycles and cafes and all kinds of fun stuff. And so one of the perks that they have is free micro kitchens throughout each building. So on most floors of most buildings, you can find a free micro kitchen that is stocked with drinks and snacks and coffee and all the things that your heart might desire. And so one of the effects of Google having so much food around and all being free is that years ago, Google realized that when a new Googler was joining the team, they were on average gaining about 10 pounds, 5 to 10 pounds. And so the Google is very data driven as a company. The food team got to work trying to figure out if someone is walking into that kitchen in the afternoon and they want to make what they consider a healthy food choice, how can we support them in that decision? Because at that time, M&M's was the very most popular candy available in their kitchen. So they said, if someone wants to walk into the kitchen and is looking for an apple, how can we make sure they don't leave with a handful of M&M's? They wanted to do this without taking away the M&Ms, without making food choices on behalf of their team members. They just wanted to be able to support them in that decision. So what they did is twofold. So at that point, the M&Ms were in big bulk clear containers available in the kitchen, right? Kind of like something you would see in the grocery stores, big bulk clear containers. And so what they did is they removed the containers, they put the M&Ms in an opaque container, so it was no longer clear, and they moved it behind healthier choices. Okay, so opaque container behind other choices. In the New York office alone, in 7 weeks, that small little change resulted in 3.1 million fewer M&M calories consumed. 7 weeks, one office. And all they did not remove the M&Ms, they just removed temptation. And so the way that translates into our bank accounts is that by assigning an intended purpose for each bank account, we are effectively removing temptation. So I want to show you a little example here. This is an example of one big plate, right? Or one checking account. So in this account, there's $11,478. For some of you, you'll feel like this is a lot of money. For some of you, it might feel like that can't cover payroll, right? This is not a lot. So depending on your specific situation, add a zero if you'd like, right? Remove a zero. But this is just an example. So as you as a business owner are thinking through decision making for your business, if you are thinking about making a $1,000 investment, maybe you're thinking about signing up for a coaching program, and you look at this is your bank account, and you look at this and you say, I probably can afford to do that. It's $1,000. I have $11,000 available. Yeah, that sounds very reasonable, right? Most people at least will make that decision and say, yeah, it looks like I do have enough money. What if this is your bank account? What if that was your bank account? So instead of having all 11,000 in the same account, this is the same dollar amount, it is split over 6 bank accounts. So now we have $1,600 in OpEx, $3,296 in payroll. We have $2,784 in income. Those are funds waiting to be distributed to the other accounts. We have $1,266 in profit, $1,390 in tax, and then $1,112 in owner's pay. This gives you a whole lot more perspective, doesn't it? So if you already know, well, this $3,000 is earmarked for payroll. I can't touch that. I have to pay my team. There's $1,200 in income. I can't touch that. That is for me. There's $1,390 in tax. Well, that's the tax man's money, right? I obviously can't touch that. And then in owner's pay, there's $1,112. All right, we can't touch that either. So what are we going to do now? Really the place where this investment would come from is the operating expenses account. So within one glance, you have all of that information from your bank account as far as what you have available to spend. So as you're thinking about this $1,000 investment, when you're looking at these numbers, to me, this is not a definitely not, right? If you're thinking, am I investing $1,000? Maybe would be my answer. But you as the business owner would have a whole lot of additional context to your business. So maybe you just wrote a check for $1,000 for your rent, and that means there's actually only about $600 left. Or maybe your rent check just cashed and there's more money coming in next week, right? You know the ebb and flow of your business, or with Profit First, you absolutely will learn the ebb and flow of your business. So you are able to just make better business decisions by having that information. So instead of looking at 11,000 and saying, yes, absolutely, let's do it, this might cause you to slow down and pause and say, like, oh, actually, can I do this? Is there a payment plan? Can I pay $333 over 3 months, right? Is there another option available that does make financial sense for the practice? That is what Profit First is going to do. And really, that is one of the things that I love about Profit First. It's not asking you to change your behavior. Most people are going to look at their bank when making a business decision, whether that is on the computer, on the app on their phone. That's how most people operate. You don't have to become this savvy financial analyst to implement Profit First. You just have to look at your bank accounts and decide what you're going to do. So next up is one of our next Profit First principles, which is enforce a rhythm. Cash is the food or the oxygen for your business, right? So you have to give it enough so that it can keep going. You have to keep putting wood in the fire. And so on a regular basis, money is going to move from that income account that we discussed earlier to the other 4 or 5 accounts, depending on your situation. Establishing this rhythm is really going to help you see the ebb and flow of money in your business. So instead of looking at your statement of cash flow, your profit and loss, all your financial reports, you can and should still look at those. But you also have the opportunity to just within your bank account, see the movement of money in your business. It can help you identify problems much, much faster when all the things are not mixed together. For example, if all of a sudden Blue Cross Blue Shield stops paying, you will see the dollar amount in the income account stop growing, right? Or grow slower than usual. If you're moving money on a regular basis, you know every week there's usually about this much money in that account. If all of a sudden that gets cut in half, you're going to notice that something is going on. But if that information is mixed with payroll, your tax payments, your credit card payment, it just takes a lot longer to realize that something is going on. It's not that you will never notice it, it's just that it will take longer typically. And so there are a couple of options available for you as far as how often you're going to move money. I generally recommend that you start with moving money on a weekly basis. I like doing this because you're going to get really quickly used to what is normal for your business. For example, we have clients who move money every Friday. And so every Friday, today's Friday, they move money today. If they know every Friday, there typically is X amount of dollars in the bank account. And so they can really quickly see if you're expecting there's $10,000, but this week there's only 7, you can go on your fact-finding mission immediately instead of waiting. If you're used to there being $50,000 and there's only 40, you can go on your fact-finding mission and figure out what's going on. And so that's why I'm a big fan of weekly transfers. The other reason is that sometimes practice owners will find Profit First at a time of financial difficulty in their business. Definitely not always. You absolutely can start Profit First even if you're doing well and do not have cash flow problems. But when business owners are in a period of financial difficulty, they're already a little bit strapped for cash. So going 2 full weeks, being able to fund the accounts enough upfront to go 2 full weeks without moving money can be really, really difficult. So this is a lot less overwhelming. You just need to have enough money to make it to next week. That's it. Just 1 week. That's very, very that feels much more doable. So that is often where I recommend business owners start. Next up, we have bi-weekly or every other week transfers. I am a fan of this. Once you've got enough cash that you don't actually need to make weekly transfers, I am a fan of bi-weekly transfers. That's actually what I do for my own business, for Green Oak Accounting. Bi-weekly transfers means that every other Friday, for example, you are transferring funds for the business. I like this in part because then it's always the same day of the week. It's something that you can build into your routine. You don't have to think about it. If it's every Monday, every Tuesday, whenever it is, it's built into your routine. It's something that you're always doing. Our next option is to do it on the 10th and the 25th. So twice a month on the 10th and the 25th. We have this schedule in part because most of your bills typically will be due on the 1st of the month or on the 15th of the month. And this allows you to always transfer funds before those bills become due. So 10th and the 25th. And then last but not least, monthly. It does take a good amount of cash flow to be able to go to a monthly cadence, but it absolutely is possible. But most importantly, I recommend that you select a transfer frequency that is aligned with your payroll cadence. Again, this is only going to apply if you have a group practice and if you have team members on payroll. But if you are paying your team every other week, I recommend either a weekly or a biweekly transfer. That way you're always transferring money right before you run payroll. So let's say you run payroll every other Wednesday, you may want to make your profit first transfers every other Tuesday. That way there's always money available when you go to run payroll on Wednesday. If you pay twice a month, then the 10th and the 25th can work out really well for you because you're always transferring money before you run payroll. You see where I'm going with this? Payroll, again, is your single largest expense. So we always want to make sure that there's money before you run payroll. If those are misaligned, like for example, if you pay every other week, that means you have 26 payrolls during the year. If you transfer on the 10th and the 25th, that's twice a month. That means you have 26 payrolls and 24 transfers. You can see how those get misaligned at some point, right? Where there's going to be a payroll that you run where like, oh, I didn't actually just transfer funds. It's a little bit more complex because you want to make sure that you're adding a buffer each pay period to cover for that. So I'm a big fan. Align your transfers with your payroll cadence. I've said this before. I'll say it again. I love Profit First because it doesn't ask you to change your habits. It leverages them. So it doesn't say you cannot look at your bank account anymore to make decisions. People will look at their bank accounts to make decisions. We are leveraging those habits instead. You don't have to, if you're always looking to pull up your profit and loss, pull up your balance sheet to make a decision, that would also assume that they're completely accurate and up to date every day. And that is not the reality of most business owners. If you're doing your bookkeeping yourself, maybe I think there's a very good chance that you're not doing it every single day, right? Even if you have an accounting firm doing it for you, there's a good chance that they're also not doing it every single day. They're probably touching it once a week, but it's not necessarily accurate at any given moment. And so by looking at your bank accounts with the Profit First system, you are able to always make sure that you are going to be okay. And it's going to automatically give you the information on what you're able to spend and not. There are also several optional bank accounts. I recommended you start with either 5 or 6 accounts a few minutes ago. I do want to mention the optional bank accounts because I think they can be helpful. I once in a while will hear the myth of like, oh, Profit First is great for startups, but once you have a big business, it doesn't really work. False. That's simply not true. We have lots of very large practice clients who use Profit First and have things like an expansion account or a bonus account or a PTO account. I do recommend that you limit the number of additional accounts that you use, but if it's something that can be helpful for you, I highly encourage you to have an account for something that you are saving up for. So an expansion account could look something like this. If a practice owner says, I would like to add a new location in the next 6 to 12 months, wonderful. Let's allocate a percentage of your income to that expansion account effective immediately. That way you're showing the business there is room for us to invest in future growth. And then you're continuously adding funds to that account so that when you are starting to look at new spaces, looking at buying furniture for it, adding team members, you are going to have funds already available for that. The funds are already going to be there. We have clients who add to an expansion account, not exactly knowing what that project will be. They just say, I know I'm going to add to the expansion account. When I get to a certain point or a certain dollar amount, then I'll start looking for opportunities, right? Then I might go look at spaces in this one town over at that point. But an additional account can be something as simple as Jessica's story. So I tell Jessica's story in the book. She has a rent account because her landlord is really, really bad at actually cashing her checks. She gives him a check each month, but sometimes he doesn't cash them for 1, 2, or 3 months. And so she has a rent account. She moves money into that rent account every time she makes her transfers. And that way she considers that money already spent. She knows that even if there's $10,000 in there, it's not because it's available to her. It's just because her landlord has not cashed checks for a while. And at some point he will catch them all, and then that dollar amount will go down and everything is going to be okay. Um, I want to take a moment and talk about target allocations. Target allocations. So this target allocations is where your business can eventually end up. Target allocations are not necessarily where your business is today, right? Not necessarily where your business is today. So it's important within the Profit First framework to start exactly where your business is right now. Because just the fact of going from one bank account to 5 or 6 bank accounts, that is a big change in your business. So you're going to want to start exactly where you are today. But one of the questions I get most of often is, what should my allocations be? So we are going to spend a little moment on that. So as far as Profit First terminology, your caps are your current allocation percentages. So CAP, current allocation percentages. That is where your practice stands today. And you can get to that through the instant assessment, which I'll talk about in a moment. Then your target allocations are your TAPs. So TAP, target allocation percentages. So within the Profit First system, if you've heard of it at all, have read anything about it, have heard of it through a podcast, you've probably heard the term caps and TAPs. So again, target allocations are a target. That doesn't mean that that's where your business is today. That doesn't mean where your business is today is wrong. It's just this is something to work towards at some point. And it's completely okay if that's not where you are today. So I will show you the caps in just a moment, or the TAPs. We do have these available on profitfirstfortherapists.com as well in the tools section. But I need to first tell you that over the years, my team and I have determined target allocations based on size of practice, right? So this distinction is really, really important because again, what a solo practice needs versus what a large practice needs are just going to be two different things. So a solo practice, self-explanatory, one person, one clinician doing all the work. There may be an admin, but there's only one clinician. Then in a small group practice, typically we're seeing the addition of maybe 1 or 2 part-time clinicians. The owner is still doing a very significant amount of the clinical work, usually half or more. Then when we shift into that large group practice, then more of the work is actually being done by people other than the owner. So there may be 3 to 5 full-time clinicians here, where the owner is still probably doing some clinical work, but there are more sessions being done by other people. And then we go into that large group practice. We typically see that change happen around $750 to $1 million in annual revenue, where there is the addition of a leadership level. So the addition of a leadership level is what kind of distinguishes that large group practice. And these numbers really work well all the way up to $5 million in annual revenue. They can work above that as well, but there are just so few practices in the $5 to $10 million range that we just have a lot less data available. So I feel very, very confident these numbers work all the way from $0 to $5 million in annual revenue, which encompasses 99.9% of practices. And so these are the target allocation percentages. And again, we have, if you feel free to take a screenshot of this, but we also have this available for you at profitfirstfortherapists.com. And so depending on the size of your practice, you see why it matters here, right? We offer you a range of targets for each item. And that is because not every practice is going to have exactly the same priorities. I can think off the top of my head of one client who said to our team, it is a large practice and has said something like, I know that my therapist payroll is always going to be on the high end range because I want to offer all the benefits and I want to pay them well. And that's wonderful. I think that's absolutely wonderful. But that means in exchange for that, this practice has to be very, very lean when it comes to operating expenses. They have no choice. Because if you were to add up the high end of all of these ranges, you would end up with percentages that equal way over 100%. And the one rule here is that all of your percentages that you select must equal 100%, because that is just how math works, right? We don't have a choice. So if you want to go high in one area, you have to go lower in another area, right? And that's why we give you ranges. So there's some wiggle room. There's no perfect formula where it has to be this way, right? You can think about what is important to you and how you want your practice to be in order to determine these ranges. If we look, for example, at the solo practice tax target, that is a big range. It's 5 to 35%. That is the widest, one of the widest ranges we have. And that's in part because there's a lot of variation that can happen at that size. This may be a part-time practice, and there may also be a full-time job somewhere else where this is not the only income in the household, right? There's also a big difference between someone who is single and in full-time private practice versus someone who is doing this part-time and has multiple dependents, right? The tax situation does change pretty significantly. And so that is why there is a big, wide range there. And so again, that may not be where your practice is today, but within Profit First, you're able to work towards the targets from exactly where your practice is right now. And so the way you're going to figure out where your practice stands is through the instant assessment. The instant assessment, again, is available at profitfirstfortherapists.com. It will tell you exactly where your practice stands. I know this one is a little bit scary, just a little bit, to actually look at what is going on in your business. I know it can be a little bit overwhelming, but this is really the cornerstone of the Profit First system. This will tell you what is going on in your business. And this is also an item that's going to give you an incredible amount of clarity over what is going on in your business. We often have members in our Profit First Academy say something like, oh, I did not realize this was going on in my business, right? Just by looking at it and putting it on paper, there's a tremendous amount of power to actually knowing what is going on in your business. So to complete the instant assessment, you are going to need your profit and loss, your balance sheet, and your payroll reports, if you have payroll again. If you don't have these things, you can also substitute that for your bank statement. I think your reports are better if you have them, but if you don't, just go to your bank, either download your PDF bank statements, or if you can, download a CSV with that information, because then you're going to be able to use the CSV, which is a spreadsheet, add a column and add a category there. So you might be able to go line by line and say, actually, this is OpEx, this is tax, this is owner's pay. So you're going to be able to give it a category and then sort that way in order to complete the instant assessment. I know as business owners that you are probably an overachiever. I think there's a very high likelihood. So I invite you to lower the bar when it comes to your how quickly you want to move from your current allocations or your current situation to your target. And I generally recommend that you start with 1%. For example, if you have currently been saving $0 for profit or $0 for tax, I recommend that you start with 1%. Because that is a small incremental change, and that is what is likely to stick over time and to be something that you are able to truly implement over time. If you're trying to go from 0 to 50 all at once, that means there's a lot of change that needs to happen in your business all at once, and that's incredibly difficult. And so that's why I really do encourage you to start with 1% and make small incremental changes in your business so that you are able to keep making those changes long term. And then on a regular basis, you're going to make additional changes from there. We're going to move into Q&A in just a moment. I do want to take a moment to tell you about our Profit First Academy. This is a really, really incredible group. We are reopening the doors today. One of the things that we help with the most often in Profit First Academy is the instant assessment. So the Academy has weekly office hours with our Profit First coaches. So we had one just at noon today, where you get a one-on-one slot with a Profit First coach from my team at Green Oak Accounting, where you can discuss your specific situation. That's incredibly, incredibly valuable. We typically do not have any way to work with us other than monthly accounting services. This is the only way to work with my team. You also get a monthly Q&A with me. I go over various topics, answer lots of questions that are Profit First related. So you get access to that once a month. You get some one-on-one time with me. We have a private Facebook community. We also have lots of recorded courses specifically around Profit First. So we go step by step, walking you through exactly what is the next step, right? Because sometimes this can be a little bit overwhelming, making changes in your financials and just really looking at what's going on. So this is a place where you can get a lot of support around Profit First, but also where we will tell you this is the next step. Just go to the next step, where one by one you get to know what you need to do next. And so because so many of you are here live, we do have a special offer for you. The membership for Profit First Academy is $49 per month. You can cancel at any time, but as long as you're a member, you have access. But because you're on the live stream today, we want to offer you your first month for $1, and you'll also get a free instant assessment review from one of our Profit First coaches. So you will complete your instant assessment, you will send it in to us, and our Profit First coaches will review your instant assessment and give you feedback on that and send that back to you. So this is very, very precious. We can obviously only offer so many of those, and that's why we're only offering it for those of you who are in the live stream right now. So if you use promo code LIVESTREAM, if you go to profitfirstfortherapists.com/academy, you will have the link to register and use the code LIVESTREAM. You will get your first month for $1, and then you'll also get the chance to have your instant assessment reviewed one-on-one by one of the Profit First coaches. They will send you a video going over everything, all of their feedback. So on that note, I do want to go into some questions. It looks like we have quite a bit. Let's see. I did get a question about how do I sign up for the Academy. This is at profitfirstfortherapists.com/academy. A Facebook user said, I already signed up based on your email this morning. Can I still get the assessment? Send us an email. It is info@profitfirstfortherapists.com. And send us an email and we'll get that to you. How long is the promo? So actually this live stream code is going to work. We opened the cart this morning and the cart closes on September 4th at midnight. So you have from now to September 4th to sign up, but I believe we only have 50 slots available for that, for the Profit for the assessment review. And so once those are gone, they are gone. So Sean, I would recommend that you sign up as soon as you're, as soon as you're able to, because I do expect those typically do sell out. And I want to just take a second to talk about like opening and closing the doors. We have done this very intentionally. We've only opened them once before because we wanted to have a controlled environment. We wanted to be able to go through with all of our members. So this is just the second time that we're opening the doors to Profit First Academy. We are doing it this way and not just letting it be open enrollment, in part because there's a lot of community that comes with everyone starting at the same time and continuing on together. So that way we have a whole cohort of members that are going through some of the same things, and that really is very helpful for them. All right, so let's see. One of the questions. Perfect. Let me go through some of the questions. Let's see. Molly has a question here. Do the accounts change if you are a solo sole prop? And do you recommend an account for paid time off in retirement? Okay, wonderful question. I love it. Do the accounts change for someone who is solo? No. All of the solo accounts, you would not need the payroll account, but you would want all of the other 5 accounts. Molly, if you want, I do think it could be helpful, if it is helpful to you, to have a paid time off account. That way you are putting money aside. When you do take time off, you're able to pay yourself out of that account. You could also just add additional funds to the owner's pay account so that you are able to, that you're not taking everything out, right? For example, you might be moving $2,000 every 2 weeks into that account, for example. I'm just using round numbers for an example. Maybe you only need $1,500. So that means every week you're leaving an additional $500. And then when you take vacation, there's going to be additional money available so you can still pay yourself, right? So just to use round examples, that's how I would think of it. And love that you're thinking about retirement. Love, 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 love. I would probably also do that from your owner's pay account if you're able to. If you feel like you're not going to be disciplined enough, then I definitely would add another account for that. So it's kind of a little bit of personal preference there. All right, let's see. Nick says, I'm a W-2 based grouped S Corp and pay myself a salary of $60,000 per year on the books. Should this $60,000 be going into the owner's pay account? Great question. No. Okay, so in the case of an S Corp, right, and this is where, I mean, there's so many little variations. I cover this in the book. I did not cover this in today's presentation. When you have an S Corp, if you go, Nick, to profitfirstfortherapists.com, I believe it's /tools, or just look for the tools button, you're going to see our instant assessment. There's a line item for owner's pay, right? You're going to add that to the amount that you transfer into the payroll account. So that account is going to include wages for your clinicians, for your admin, for your leadership, and for you. Then you can still have, though, that owner's pay account where those are funds available for a regular distribution. There's a good chance that you probably take home more than $60,000 per year. So maybe you take usually an additional, $1,000 here or there. That can go into your owner's pay account, and then you take it out from there whenever you would like to, or on a regular basis. So that's how I would think of that. But ultimately, you can only connect payroll to one single bank account. So we want to make sure we're transferring funds to your payroll account for you as well. All right. Marin asks, I have a solo practice, PLLC. Would my virtual assistant come from OpEx or payroll? In this case, because you're a solo practice and they are not an employee of yours, I would put that in OpEx. If you had a group practice and have team members, employees that are admin, then I would move that to payroll. But since they are a virtual assistant, there's probably a company, or you're sending them a 1099 at the end of the year, I would send that through OpEx. That way, because you're sole prop, you don't need to have a payroll account. So that's one of the things that you can do there. All right. Christy asks, when you go to transfer money from the income account to the other accounts, do you move all the money from the income account to the others, leaving a $0 balance in the income account? So Christy, many banks will have a minimum dollar amount that they want in each account. Some are larger, some are smaller. When there is a minimum account, you will transfer everything down to that dollar amount. Let's say your minimum is $50 and there's $1,000 in there. You're going to transfer $950 out. So you always want to go down to that minimum. If your bank doesn't have a minimum, you technically could go down to zero, but usually you want to give yourself a little bit of a buffer there. So all the way down to your minimum is what I would say. Okay, how does this work when I'm charged a fee if the main checking account falls below a certain amount? Do I always leave that minimum amount in there? Yeah, great. Related to the other question. So if Chase Bank has a minimum balance, for example, most of the time that's about $2,000, which is a lot of money, but a lot of our very large practice clients bank with Chase and have that minimum. So let's say there's $50,000 in the account, you go all the way down to $2,000, right? So, and then you transfer 48,000 out. I'm using a larger example this time, but you could add a zero, take away a zero, depending on your specific bank. So you would transfer down to that amount to avoid having those fees. So you just want to ask your bank, what's the minimum amount of money that I need to leave in here? And you want to make sure you're always leaving that. That's it. And in some cases, it can be cost prohibitive for a practice to use a specific bank, right? So if I'm thinking of a solo practice, if they were starting to bank with Chase and Chase says, oh, you need to have $2,000 in each account, that's $10,000 across all accounts. That might not be possible for them. If that was the case, I would look at what are the options in your area? What are other banks that that might be more profit first friendly? But and there are a lot of different options out there. Uh, Again, if you go to profitfirstfortherapists.com, in the tools section, we do have also bank recommendations based on recommendations from other profit first professionals. There's an entire network. We have lots of banks to recommend there. And actually, I'm a big fan of Chase. I'm kind of picking on them by accident today, but their systems work really well. They have really great security, really great view only access for your accountant. So there's always a trade off when you're when you're selecting your bank. Very few banks have all the bells and whistles without any fees. So you're going to sometimes pay a little bit for convenience. Okay, how do you suggest getting out of the mindset that your income is your paycheck that goes towards all bills, business and personal? Um, so Shauna, I would encourage you to think of it as an ethical consideration. You and your business are not one. Even if you are a sole proprietor, I really, really, really want you, I beg of you to have a separate bank account for your business and for your personal. That is going, if you were ever under IRS audit, that is going to save you. That is going to help show that all of your business transactions are in one account. And that way your personal expenses are not going to be considered. When they are all commingled, the IRS can look at every single transaction and say, hey, your mom gave you $50 over here. That maybe that actually is income, right? And then the burden of proof is on you to prove that it actually wasn't income. So I truly ask you, from a liability perspective, from a simplicity perspective, keep your business and personal separate. So when you are making, you're paying yourself, right? You would transfer your money from your business to your personal account and then pay all of your personal bills from that account. So I don't want to see any personal rent checks or credit card payments for your personal life in your business account. Those should be completely separate, no matter what your entity is. When you do have a separate legal entity, though, and I'm an accountant, not an attorney, even when you do have separate legal entities, if you mix the two, you have broken the veil. And so we, again, I'm not an attorney, but you may run into some situations where you are personally liable for things that are going on in the business. So don't do it. Any accountant, any attorney will say, like, please do not put them together, just because it's going to make your life much easier if you ever have any kind of trouble. And audits are very rare these days, right? But it's not impossible. And even if you have done everything right, you can still go under audit. So just make life easier for yourself. Keep everything completely separate. All right, Desiree asks, should all those extra bank accounts be business accounts? Yes. Yes, in most cases, they should be business accounts. There are sometimes small exceptions, but ultimately, everything that you do in your business should stay in the business. So they should be in the business name, and then when you're taking money home, you move it to your personal bank account. Okay, so yes, I would like for it to be all business accounts. Operating expenses, income, and payroll should be checking accounts. Owners pay as well, actually. So 4 of them should be checking accounts. Tax and profit can be savings accounts. You won't get a huge amount of interest on those, but they can be savings account because there are less transactions. Typically, savings accounts have a maximum number of transactions, so that's why I don't recommend that the other accounts be savings accounts. All right. On Facebook, we got a question. My current bank requires fairly high minimum balances in accounts. I'm thinking this is going to be expensive to implement unless I switch banks. Are there profit first friendly banks? Yes. So I think I mentioned this, not knowing this question was coming. If you go to profitfirstfortherapists.com/tools, we also have this information in the Academy as well. You will see there's a bank section or profit first friendly banks. You can get that. You can get that information there. And this is crowdsourced from people who have had success with banks. All right. Marin says, would you have a perfect PTO and CEU account or take this from another account? Maybe you mean separate. Maybe I'm going to assume you mean separate. Would you have a separate PTO or CEU account, or can you take it from another account? You can. It can be part of um, PTO can be part of payroll, for example. But if it is helpful to you, right? If it is helpful to you, you can absolutely have a separate account. Really, when we talk about the additional accounts, it's all about what is going to be most helpful for you in your business. Like, for example, if you are someone who gives PTO, 1 week of PTO to everyone on January 1, you probably want to save ahead for that. Because what if everyone took PTO in January? Do you have enough money for that? Right? Or, so situations like that can arise, like where it may be beneficial for you to have those things available. Shauna asks, how do we allocate and where for medical and retirement? So Shauna, those are really personal items, right? I definitely want you to be thinking about that, but those should be part of your owner's pay account or your payroll, depending on how that is situated. So either the owner's pay account if you are S corp, sorry, owner's pay account if you're a sole proprietor, LLC, partnership, and then if you have an S corp, those items are probably run through payroll. So then you would want to make sure you're allocating enough funds in payroll, right? So it a little bit depends on the entity here. You may want to talk to your accountant to see, like, depending on your setup, how you would do it. But I would consider that when you're thinking of what is the dollar amount that I need to pay my day-to-day living expenses, I would consider these amounts in that, right? Just like you need to make sure there's gas in the car and food on the table, you need to make sure your health insurance is paid, right? That's not that's a must have, not a nice to have item. So I would think of it that way. All right, we're a little bit over time. I have a couple more questions. I'm going to try to get to these quickly. Okay, Hannah asks, is there a link to the assessment? Yes. If you see in the banner, profitfirstfortherapists.com/tools. Let's see. Right. Casey asks, we did the instant assessment for our taxes. Our caps were around 18% and TAPS is 5%. Last year we came in almost even on taxes. So I know we were paying what we should. How do you reduce taxes without increasing OPEX? Small group practice with 1099s right now. Okay. So that is possible, right? There are some situations where, so for a small group practice, the tax range, I believe, is 5 to 25%. So it actually sounds like you're right in there. You're right in that, within that range. Usually, so the question is, how do you reduce taxes without increasing OPEX? You may not actually be able to reduce taxes. As we get into those larger practices, right? Medium and large group practice, a much bigger percentage of income is going to payroll. And that's why ultimately the percentage of your revenue that is profit is going to be smaller. You're making more dollars, but it's just becoming a smaller piece of the pie, right? Because you're paying out so much for other people. So that's how that's going to shift. So if you look at the medium group practice, that range for taxes is 5 to 15%, because over time there's just less of the money that is left for you as a percentage, right? Not dollar wise, but as a percentage for you. All right. Let's see. Okay, this is a fun question. Is there a ceiling on the TAPS? If I've reached 10% as a medium-sized practice, should I stop raising the bar? No, I love this. If you have 10% already in tax, keep going. These ranges have been developed with years and years looking at hundreds of practices and looking at what works best for most people. There's always some outliers and fringe situations, right? Where we have some clients who have maybe a 30% profit margin in a large group practice. That is, though, highly unusual. That is the exception and not the norm. And that's why it's not in the target allocations, because showing that in a target allocation is not exactly helpful, right? It's not most cases. So if you can do better, amazing. I love it. Go do it. Absolutely. Keep raising the bar. But just know that there may come a point where you realize, like, as we keep growing, okay, I really was about where I need to be, right? That may be it, or that may not be at all. So congratulations, and just keep going. Absolutely. Jenna asks, I'm in the preparation stage of starting my solo private practice. Is the academy only for folks already in private practice? That's a good question. I don't remember off the top of my head if we probably do have people who are just getting started. Profit First Academy is really not about where you are in your practice. It is about where you are in your Profit First journey. And so, Jenna, I'm excited for you because you're in this really unique position as just starting, where you actually can start with target allocations with the first dollar earned. There's a good chance that you're going to have to invest in your practice, right? You're going to put some of your personal funds into the business to get it started and pay for your EHR, your registration, right? All those little things. But then from the first dollar you earn, you're able to start with these target allocations, which is a really cool place to be. So if this is something that you value and you want to start implementing Profit First from the very beginning, come on down, come join us. Valerie asks, for the instant assessment, do you do this for the full calendar year so far, like January through August, or something different? Mallory, I recommend that you use the longest period that you have available, up to 1 year. So if you have last quarter, use that. If you have year to date that's accurate, perfect, use that. The longer the period, you're going to catch more of those fringe cases, or the things that don't happen all the time. Like if you pay liability insurance once a year, if you just do last quarter, you may not actually catch that. So the longest period you have available, up to 1 year. The only time that does not apply is if you have very significant change in your business. Like let's say in January, you had 2 team members, and in August, you now have 8 team members. January does not matter anymore. It's irrelevant. So in that case, we want to use what is closest to what is actually going on in the business now. We might actually use only August. But if it's been about the same, I would use the longest period you have available. All right, Melissa asked, I think this might be our last question. How do we do an instant assessment when the profit and loss and balance sheet are not up to date by many months? I would say, Melissa, let's get you up to date first. Probably step 0 would be, let's get those up to date if you are able to, or go to your bank statements or bank activity, right? If that feels overwhelming, if you're like, I want to start Profit First, but I'm not ready to tackle that, go to your bank statements and start there, so that you are able to just get the ball rolling with your instant assessment. That's probably what I would do. So either one, but you need something to start. So I would start with one of those two. All right, we ended up going 10 minutes over with questions. Thank you all so much for attending live. Thank you for all of your very, very thoughtful questions. I'm showing this one last time, profitfirstfortherapists.com/academy. That is where you will find registration for Profit First Academy. We would love to have you. It's a very warm, welcoming group where my team and I will walk alongside you to get you get Profit First implemented in your practice. So we hope to see you there. And thanks for joining us today, everyone. Happy Friday and have a great weekend.